Well, on this week's episode of Smart Money, we talk about how you can pick the right health insurance and what are the things that you need to do before you select your insurance plan. Girish Nayak is with us. Girish, what are the, how is the procedure, right? How do you select the right health insurance plan?
Yeah, good question. There are different kinds of individual insurance plans that are available. So the first basic one which you understand is the indemnity plan, which typically covers you when you are hospitalized. So your expenses during hospitalization are covered by the plan. There are also what we call the benefit plans. So this kind of gives you a fixed payout if you contract a certain illness, like for example, a cancer benefit. If you contract cancer, it will pay out a lump sum amount which you take the insurance for. Without going into whether you take the treatment or not, that's not an issue. But in the previous case, in the indemnity, you have to actually get hospitalized and take the treatment. It is reimbursing your actual costs. There's also personal accident policies which cover you against accidents and all. So that's the different kinds of health plans here there. The other aspect
which is a good one
so you typically need an indemnity plan, definitely.
Okay.
You definitely need an indemnity plan.
So corporate plans are mostly indemnity plans?
Corporate plans are mostly indemnity plans, which cover you for hospitalization. Now, indemnity plans also come with multiple ways. You, as a family, you can also purchase what is called a floater. Because when you take an individual plan, say you take a 10 lakh plan for an individual, then it covers you for a 10 lakh. But if you're a family of 4, 2 adults, 2 children, you can cover the entire family on a floater for 10 lakhs. Then any one of them incurring expenses of up to 10 lakh is covered. The total family incurring expense of up to 10 lakh is covered. So it need not be any one of them can incur the expense. It's covered. So 1 year someone can incur the expense, multiple people can incur the expense within the plan, as long as total is about 10 lakhs.
Okay, I have a question here. You earlier said that a corporate plan is a lot of generous corporates sort of include your parents also in the plan, right? But what happens if and when you leave the job to your parents? I mean, you can take a separate plan, but largely these individual plans don't include parents who are above the age of 60. So what happens then? How do you safeguard that?
So you have senior citizens plans also.
Okay.
So a lot of insurers have plans for which cover senior citizens. Of course, the premium is a bit higher out there naturally, but that's something that is available.
Okay.
So you can use a senior citizen plan to cover parents. Again, like I said, there's also a tax angle to it because you cover your parents and up to 50,000 of premium you can set off in your taxes.
In your taxes, okay. And how do I settle my insurance claims? That is, because there's cashless, there is reimbursement. A lot of corporates have cashless insurance processes as well. But what is the process like? So
typically, the cashless process works for both corporate as well as individual insurance claims. So typically if the hospital is within the insurer's network, then you can go to the hospital and there'll be a TPA desk out there where you give in your papers and the cashless approval is given by the insurer, and based on that the hospital treats you without you having to pay out any sum from your pocket. But if that is not available, you can also go into reimbursement, which is basically you make the payment and then give the bills to your insurer to reimburse you for the cost you have incurred. Cashless is always better because you don't have to shell out anything from your pocket and this. And some insurers, I mean, we are definitely offering a anywhere cashless facility, which is basically even if the hospital is not within our network. So our network is about 7,500 hospitals, but even if the hospital is not within our network, if you intimate us 48 hours prior to your hospitalization, then we can arrange a cashless in that hospital as well.
Okay.
So that's a great benefit to
be associated with a bigger brand like ICICI Lombard.
In fact,
got it.
At the industry level now, we are having this initiative where everyone is trying to move to a cashless anywhere. That should be out soon, but we already have had it for almost a year now.
So you don't have that stress of there's only a certain amount of hospitals in your list where you have to sort of go and get your treatment, or else you won't get cashless. So all that is going to be sorted out.
Yeah, once we have this cashless anywhere.
Cashless anywhere, okay. I want to understand different scenarios, right? Just real life examples. If I'm a 25-year-old, if I'm a 33-year-old, I'm a 40-year-old, what is the kind of insurance that I need? So let's start with the age of 25. In that age group, how much insurance do I need? How much cover do I need? Here we have...
yeah, typically 25-year-old I'm assuming single, just started off on the job, would 7.5 lakh insurance would be good enough. Of course, there are tax benefits, and that's 10,000 would be the approximate premium, including taxes, which one would have to pay.
So this 7.5 lakhs you're saying is
The sum
largely
insured.
corporate insurance has about 5 lakhs. So you're saying if someone is 25 and has a 5 lakh corporate insurance, you have to take an additional insurance, a sum assured of.
Better take insurance from the beginning. And what happens if you don't claim the insurance, then you get a bonus, which is called additional sum insured, which gets added to the sum covered every year. And depending on the insurer, this could go up to 50 or 100% of the sum insured. So if you're getting covered by corporate insurance and you're not claiming on this insurance, soon this will, with the additional sum insured, this could go up to 15 lakhs on its own.
Okay.
Because of the additional sum insured.
Okay. Now let's move on to someone who's say 33 years old, has maybe just got married or is planning to have a child, right? What is the kind, and is a corporate employee, what is the kind of insurance that they need?
Yeah, I would say that they would need to up their cover a bit, make it about 10 lakhs, and would have a floater policy covering both self and spouse. So that would be better. And of course, you would have add-ons because your requirements would have increased. You would have a maternity benefit, which would be important. Again, newborn baby cover, OPD. Some plans offer OPD. Not all insurers offer OPD because most of the individual insurance is inpatient treatment. That is, you need to get hospitalized. But there are plans, and like we do have plans which offer outpatient treatment, which is basically your consultation, your diagnostics, your pharmacy charges. So you can buy OPD add-on which covers all these benefits. So that's something that they could cover on this.
Okay. And let's move on to the age group of say 45 to 60, right? What is the kind of insurance that they need? And since that's an age which is a slightly tricky one, okay, we have here 45-year-old businesswoman who's married. That's a tricky one because that's really the age when you start developing some health issues as well.
Yeah.
So how do you plan it?
Like I said, plan from before, but at this point in time, you typically say have a couple of kids, so 2 adults, 2 kids, 25 lakh policy. Again,
is 25 lakhs enough these days?
I'm just giving you a base. You can always, there are policies which now offer 50, 1 CR.
Yeah.
We have now launched unlimited coverage. So.
Oh, really? I didn't know that. Okay.
We just launched it.
Okay. What does that include?
It's all your everything, but without a limit for coverage.
Okay.
So
there's an extra premium for that, perhaps.
The premium is higher, obviously,
Okay,
but for those who can afford, they can buy that coverage, and it covers you worldwide as well.
Okay.
So any costs incurred when you travel anywhere. Again, like I said, for this profile, you'd also need annual health checkups.
Yeah.
So if your plan offers you annual health checkups, that should get covered because at the age of 45, you start
doing your health checkups.
Doing your health checkups more regularly than when you are 25, right?
I know, I understand. So what about retirement, right? There are some people who have hit the age of 60, suddenly developing a lot of health issues, but have no insurance. So what do they do? We have here a 59-year-old pensioner, has pre-existing medical conditions, perhaps diabetes. Some even have critical illnesses like cancer, etc. So what do they do if they don't have insurance? Yeah,
so typically it's very difficult if you have developed a critical illness like cancer to get a policy.
Okay.
Because that is what you call a non-insurable risk. But if you have diabetes, if you have hypertension, there are policies that you can get. The premium will be higher. And again, as a good practice, again, it's always better to declare your pre-existing illness to the insurer before taking the policy.
Okay.
That's a lot of people undergo stress at time of claims because they have not declared or they have forgotten to mention any pre-existing illness. And diabetes and hypertension are the most common ones that fall into this category. Someone doesn't mention that he or she has had diabetes when getting or has hypertension when getting the policy. When it gets found out during a claim, the claim gets rejected and you have these other issues that turn up. So it's always better to declare upfront because there'll be some loading on the premium, but you'll get the policy. So for a person who's retired without a policy, you would require a cover which typically again has annual checkups. You would add the outpatient treatment, OPD, because there would be a lot of at that age you necessarily need to see the doctor much more often than you see at a younger age. So that's a kind of policy you take with about 15 lakh cover at least, and a floater again for self and spouse, and that would be in the range of about say 50,000.
Okay, okay. One final question then. A lot of people get sold ULIPs, right? So, I mean, I know it's a very tricky topic, but just demystify it for us. Should people go for ULIPs or not? See, I am strictly against it because I believe that your investment should be absolutely separate from your insurance.
Perfect.
Yeah, that's the right way to look at it?
You know, that's a life insurance linked policy.
Of course, yeah.
Health is
separate.
Health is sold without a...
yeah, without an investment angle to it.
Without investment. It's protection for your investment. I mean, that's how you look at it.
But for life insurance, for term insurance, say for example, you think it needs to be a separate policy altogether?
Term is, I mean, you should take a term policy as well because that is important. But take a term policy. It's simple insurance. That's
so no to ULIPs.
Again, investment and protection
should be separate. Okay, that's what you believe.
That's again to make it more simple. That would be a. But health, we don't have that. It's purely protection. Look at it as protection for your investments and
for your health.
Yeah.
Okay. All right, Girish, thanks a lot for joining in. Appreciate you taking the time out and speaking to CNBC TV18. With that, it's a wrap on Smart Money. Thanks a lot for watching.